Welcome back to our special coverage of the GDP numbers that were announced for the third quarter. It's coming in at a strong 7.2%, helped by a very good performance of agriculture, manufacturing, which is 8%, as well as electricity, which has come in at about 6%. The standout performance also came from construction. But we have to look at the GDP and the GVA numbers from the expenditure side, and there we are seeing a mild performance in consumption, which has grown by 5.5%, but a very good performance from capital formation, which is 12%. To discuss these numbers, we have been speaking with Professor TCA Anant, former Chief Statistician, Sajjid Chinoy of JP Morgan, and Soumya Kanti Ghosh of SBI. Okay, to come to the expenditure side, Sajjid, would you say this is a very good turnaround in terms of the gross fixed capital formation number picking up?
I'm going to be a little contrarian and reserve judgment on that part. I think we've seen in the past that quarterly estimates on the expenditure side tend to be very volatile. You've seen in the past fixed investment in a year's time has gone from an estimated 16% growth in June 2016 to less than 2% in 2017. Yes, there is some evidence here that capital goods production in the IIP data has picked up, but that number is notoriously volatile. So I think we should not hold on to one number and extrapolate too much, because if you look at things on the ground, the fact is in the last few months, corporate bond issuances have kind of dried up because the yield curve has steepened so much. You're seeing credit growth has picked up. It's largely retail. You're not seeing much credit to industry pick up. So, you know, in a way, it doesn't pass the smell test as yet to suggest that we're on the verge of a big capex cycle, especially given the deleveraging that's going to occur in the banking sector, and given, you know, very elevated yields among corporate bonds and government bond yields. I'll just make one quick point, Latha, because this affects GDP more generally, which is net indirect taxes has been a big driver between GVA and GDP. They're growing at 13% year on year. Now, we have to be a little cautious here because part of this 13% growth is a very weak base. The previous year, same quarter, net indirect taxes halved from 12 to 5% in the quarter of demonetization. So you get this one bump up, but this is unlikely to sustain going forward. So GDP going forward is going to asymptote closer to GVA. And therefore, at some level, this buoyant GDP print slightly overstates the kind of true picture of the underlying economy, which is better captured by GVA. Okay.
Well, actually, Soumya also pointed that out earlier. But Professor Anant, your reaction to this discrepancy between GDP and GVA, as Sajjid points out, there is a very weak base for indirect taxes last year, same time. As well, probably a lot of GST was collected, but the transitional credit was paid out in January. And is that why there is such a big discrepancy between GDP and GVA? Is that likely to reduce going forward?
See, I think Sajid's point is correct that insofar as indirect taxes are concerned, there is a base effect which is operating in the third quarter. And I think we should also keep something else in mind. This year, overall net indirect taxes are going to be a little volatile because the GST weight is playing out. It's not clear how much of the money will actually, because government still works on a cash basis.
Yes.
So how much of it will be received through the month of March?
Okay.
And and in fact, the finance minister had also referenced this, that he's facing a certain degree of an arithmetic shortage in revenue as a one-off this year because of the transition to the GST and the manner in which it is happening. In the long run, I think the revenue process is going to be more robust and buoyant. So you may see next year a much greater divergence.
Okay.
But into the fourth quarter and the whole year as a whole, I think what we are giving in the second advance seems to be more reasonable.
Okay. Yeah, I think therefore we shouldn't get too euphoric with that 7.2% GDP as our experts put it. It's better to look at the GVA number, and for the full year that's growing by a modest 6.4%. It's not all hell breaking loose like the 5.7 that we got in the first quarter, but 6.4 is the CSO's forecast for the full year GVA, and even for the third quarter it is 6.7, not vastly bigger than the 6.6 which our economists had forecast in our poll. Okay, now to come to again to the expenditure side. Soumya, we've already been discussing this capital formation number, which is a very volatile number. The private final consumption expenditure has grown by only 5.5% in the third quarter. And for the full year as well, the CSO forecasts a 6.1% growth. Is that a spot of bother? Not very good consumption numbers?
No, I think that's a fair point, because if you look into the trend growth in the PFC, that has been around the range of 6.5 to 7% in the last couple of years. So from there, if it goes to around 6% or so, I think there is an element of demand laggard in the system. But having said that, I would like to add to Sajjid's points regarding the investment. I think, yes, I think it's notorious to look into the quarterly investment numbers, but investment, I want to put out one rider is that much of the slowdown in the investment in the last couple of years is also because of the fact that the households have actually shied away from this real estate sector. So that's why you will find that the household investment has declined rapidly in the last couple of years, and that is one of the reasons which is pulling back the gross fixed capital formation. So once the construction sector revives, I think that could actually act as a bump up to the overall investment demand in the economy.
Okay, fair point. And now to what clearly looks counterintuitive to all of us, Professor Anant, population growth in the current year has been put at 1.3% compared to 1.2% last year. I mean, we thought our population is growing, but at a slower pace.
Look, I don't know about this. Let me say this. Principally, our population estimate is from the censuses, and in the intervening period, there is a method of population projection, which is done by on the basis of a recommendation of an expert group, which the RGI constitutes.
Okay.
My feeling is you may want to check with them. There may have been some change in the transit, because you know this population projection numbers are made for about a 15-year period, and they are then revised after a particular census, and a new set of projections are made. So something may have happened there, but broadly the long population dynamics which is revealed from the census data is consistently being borne out, that our population growth rates have been declining. This, as I said, without having further details, it's not really possible to say more than that.
Right. I'm sure, I think you're also fighting a back throat, Professor Anand. Thank you very much for that explanation. At least it removes doubts about the long-range movement of our population growth pattern. Well, final questions to you, gentlemen. Sajjid, is there enough spunk in this to say that there can be a sharp rebound in the coming quarters, or is this just mild growth?
I think we need to separate the next few quarters, Latha. I think the next quarter you could accelerate even further. And this is principally because there is a very favorable base effect in the Jan to March quarter. But to be fair, also, you know, the sequential momentum of several high-frequency indicators is increasing. So I think next quarter will be stronger, and we'll think that we're in the midst of a broad-based recovery. But just a cautionary tale here. I think next year there are two reasonable headwinds. One is if oil prices remain close to 70, that would be close to a 20% increase compared to the previous fiscal, and that will impinge on growth. That will be an adverse terms of trade shock. The second wild card, really the elephant in the room, is the banking sector, that if on the back of recent events we see more deleveraging, more risk aversion, lower credit growth, then that is also going to be a headwind towards growth next year. And the surprise really is why India is not participating more fully in this very buoyant global recovery. 2017 saw the strongest growth in the last 7 years. Exports in India have been very soft compared to historical averages. Imports are strong, so net exports, rather than being a tailwind, have become a headwind, which is very surprising. So I think let's enjoy the moment while we can. We still expect growth to pick up next year, but I think the acceleration could be muted. We expect growth to be, 6-7 this year and maybe 7% next year because of oil prices and possible headwinds from a banking system that gets more progressively more risk averse.
Sure. Okay. Thank you very much, gentlemen. Actually, out of time, but let me quickly try and summarize. The GDP and GVA growth have picked up, but it's not as superb as the 7.2% indicates. That 7.2% GDP growth in the third quarter is more because of a low base and probably because of volatile tax collections. More generally, the GVA has grown by 6.7% for the third quarter, and for the full year, it's expected to grow by 6.4%. Still better than the earlier estimate of 6.1%, but still it is an economy that has slowed from the previous year. That's the positive. Positive also in very good construction growth and very good performance of agriculture, forestry, animal husbandry and allied services. Our experts point out that it's the allied non-farm part of rural India which has shown substantial growth, as Professor Anant pointed out. That's again a second positive. Construction doing very well is a very big positive. The worrisome part, consumption is not growing very fast. It's just about 5.5% for the third quarter, expected to be 6% for the full year. Not very good. Capital formation looks very good, but that could be a volatile number. We have to see whether we can keep up. The fearful part is exports are indicating that India is not participating in the great global growth story. Is this a turnaround quarter? It's just good. We don't know if this will go on into great guns. Much will depend on how the banking sector performs and how the construction sector is able to respond. Thank you very much for joining me in this special Indianomics, which analyzes the GDP numbers for the third quarter and for the full year.